All right, well, turning now to jobs, we're seeing a whopping 517,000 rise in January, which of course draws a sharp contrast to the recent headlines of major tech layoffs. Now, outplacement specialist Challenger Gray and Christmas seeing cuts also in retail and real estate. Now, here with more is Andrew Challenger, Senior Vice President and Head of Sales and Media at Challenger Gray and Christmas. Good to see you here. So a lot of us are trying to digest this. We know that these tech job cuts really have been getting the bulk of the attention. Put that into some context for us, because I believe January's tech job cuts 158% higher than December's.
Yeah, I mean, we are seeing really large announcements from tech companies that they're going to be cutting jobs. But I think at this point, it still feels more like a correction for a lot of overhiring, maybe some hiring mania that these large tech companies got into over the last 2 years, as opposed to a tech bubble bursting, right? This idea of a real crash in the labor market in the face of a strong number like this is a little hard to digest.
And keeping in mind, obviously, that even with a lot of people cutting tech jobs, they are still hiring. So what sort of movement have we also seen as they go from the cuts to some of these other companies that are still hiring for tech jobs?
Yeah, overall, the economy just added an enormous number of jobs in January. And so while we are seeing cuts, and we're starting to see them spread just past the tech sector, we're starting to see them in other industries as well. And we'll probably continue to see that. The labor market in general is starting to cool down as the overall economy cools down. But we're not hitting some a cliff where we're having a huge mass number of layoffs that's outweighing how many jobs are still being added to the economy.
It does seem to be this sort of slow trickle here. And you do note retailers and real estate as the second and third where you're seeing some of these losses. What kinds of losses are we seeing there?
Yeah, we've started to see job cuts as well in some of those areas where consumers are starting to spend less money. So in areas that are really affected by interest rate increases, like in real estate, people are spending less on homes. Automotive, we're also seeing some cuts. And those are some areas where people are just starting to slow down their spending as things start to cool and people get a better sense of what the economy is going to look like as we move away from this kind of super inflationary period.
And what about on the flip side? Where are some of these jobs going? Which of the sectors are really benefiting right now and scooping up some of these workers?
Yeah, well, we saw the largest gains in employment over the last month in healthcare and in food and accommodation. So restaurants and retail, those areas of the economy that are still servicing American consumers spending domestically are booming. We also saw quite a few jobs added to kind of the corporate business sector, professional and business administration jobs. Lots of those temp worker jobs as well increased over the last month.
And even in terms of location, California, understandable, being that's where a lot of these tech sector jobs are, but also Washington and New York as well in terms of states that are also seeing the biggest layoffs. How do you see that playing out? Is there a reason why it's not more distributed, especially when you look at some of these other industries that are under pressure?
Yeah, it's a good point. I think the reason we're seeing it concentrated on the West Coast right now is because of how concentrated the layoffs so far have been in the tech sector, which are overrepresented on the West Coast of the country. We are starting to see those announcements spread into other industries. And with that, over the next few months and quarters, we'd expect to see layoffs start to spread across the country in a little bit more of an even fashion.
And what about some of the more resilient sectors at the moment? Where are you seeing really the least amount of cuts? Where are you seeing at least some sort of normalcy and consistency?
Yeah, there still is an enormous shortage of workers in the retail and they call it leisure and hospitality. So restaurants, travel, people are still spending lots of money on consumer goods and durables. And that's an area there is massive labor shortages. There's still 11 million job openings in the country, a number we never saw prior to the COVID period. It's a really high number. And we continue to expect to see a lot of hiring happen in those areas. But over the rest of the year, we'd expect them to cool slightly down from this really high level where they're at.
And adding to that pressure, of course, concerns about recession, how deep it'll be, whether or not the Fed can stick the landing. How does that perhaps shape the hiring picture as well, as we're already seeing a lot of companies trying to tighten their belts?
Yeah, I mean, I think you're seeing hiring managers now take a step back and say we've been in this rapid hiring period for 2 years. A lot of companies have grown their payrolls significantly, and I think they're getting more cautious about bringing a bunch of people on in the face of some economic headwinds. So I'd expect to continue to see the say 6 month trajectory we've been on, which is the labor market slowly cooling. This month feels like a little bit of an anomaly. I would not expect to start to see the labor market really spike up in the other direction. We're going to continue to see some cooling as the Fed continues to cool down the overall economy.
All right, a big thank you for joining me this morning. Challenger Grain Christmas SVP and Head of Sales and Media, Andrew Challenger. Thank you for joining me.